What is up everybody, Gifford here, and today I'm going to show you how to calculate how many shares you need to buy into a company to get $1,000 worth of dividends per month. So some people don't know how many shares you need to buy, say if you wanted to get $1,000 worth of dividend. Since I do dividend investing, this was an important question because this is something for me to aim at, sort of plan towards a goal. And after this video, you'll be able to calculate this for yourself, whatever money figure that you want per month, and then the dividend yield from a company. You'll be able to work it out and see how much you need to purchase for the amount that you want to get paid. And just remember that dividend investing is an income strategy, and along with that, with this investing strategy, it does cost a lot more, so you need a lot more capital to be able to do this. So getting straight into the calculation, if I was wanting $1,000 a month, then what you have to do is you multiply $1,000 by 12, which is 12 months for the year, and then you get the stock dividend yield, which we're going to use Sharesies to find a couple of stocks there. I've got a couple of examples. And then what you do for the third step is that you divide it by the dividend yield. This will then give you the amount in dollars of how much stock you need to buy for it. Obviously, you just take that amount, it's over the year, and you divide it by 12, and that should equal to, in this case, $1,000 of dividends per month. So what does this look like in real life? So let's go into the Sharesies account and let's find one of my stocks that I invest in. And a good starting stock to go up here is probably the ETFs, and a big one that I like to have is VYM because that's a Vanguard high yield dividend fund. So click on that and we can see I've been buying it here pretty regularly, but the most important thing we want to do is we want to grab this gross dividend yield figure because we need that. So using the calculator, I want $1,000 of dividends. It's not going to matter whether it's US dollars or NZ dollars, because it's in US dollars, we'll just stick to that. But say I wanted $1,000 of dividends per month, I'd put 1,000 and I multiply that by 12 to give me the yearly figure. And then what you do is then you divide that by the dividend yield. 2.6 would equate to 0.026. And this figure here is how much I would need to buy. So it's a fairly large figure. You know, let's not kid ourselves here. You do need a lot of money to be able to generate these kind of passive income. 12,000 US dollars obviously is a lot of money every year to get. So it's going to need a lot of capital to be able to get that. But anyway, the amount is $461,538 that you would need to buy this stock right here. And just to do a bit of reverse calculation, you would multiply this by 0.026. And then that would give you the 12,000 per year, and then you just divide that by the months, and obviously that's how you get the $1,000 as proof of how to do this. So if $500,000 is a little bit too much, what you can do is I have another stock actually just to show you the different amounts of capital that you would need for a different type of strategy. So let's look at another company. Where is it here? So here it is here, the BlackRock. Now I know this one pays a much higher dividend, and the dividend yield on this one is 10.12. So calculating this here, not really talking about the stocks or the valuation or anything like that, but just straight out calculating how we get that $1,000. So let's just clear all this now. So we want $1,000 and we want to multiply that again by 12 months, so we get the same amount. And so what you do is you divide that by the dividend yield. Let's just have a look at it now. So now we found the dividend yield. Let's divide that by 0.1012, so that's there. And for this particular one here, you would only need a capital of $118,577. So the big key takeaway is that the dividend yield plays a massive part in this, but just remember that there is stocks out there that will be a dividend trap. Just because the dividend yield is very high doesn't make it a very good stock to buy. In this particular case, this isn't too bad, but this still has risks. As you can see, it has come down a bit, but you know, do your own due diligence on what BIT or BlackRock multi-sector income trust is, and just don't look at the dividend yield. But anyway, you can do this with any type of stocks or any amount of money. Say if you only wanted to do $50 of dividend income, you just multiply that by 12 and do the same formula for whatever stock that you want to get, and you can apply for that. So now you know that knowledge, go and use it and try to aim for a target. So when I found about this, I wanted to use this to buy KFC every month for myself. So I worked out how much the target was, multiplied it. Because I invested in a lot of stocks, I kind of had to average it out, right, the dividend yield, and then this is how I was able to find the number to invest in to get that. But now I'm investing for growth, so my strategy is a little bit different. But anyway, if you have any questions on that quick formula to use or how to calculate it, put them down in the comments there. Have a look at my referral codes if you're interested in investing from New Zealand or you just want to start. If you want to follow me, you can head over to Instagram. I post there every other day about my portfolios and what I'm doing in the market, as well as general stock market news. The trading platform I use is Interactive Brokers, Hatch Invest, Stake, and Sharesies for individual companies, and I use InvestNow for index funds. If you want to start investing, you can use any of my referral codes down below to start your own investing journey if you are from New Zealand. Please hit like and subscribe if you're interested in this type of content. Otherwise, thank you for watching, and I will see you in the next video. Goodbye.